I'm not seeing savings grow materially. I think we can't have a situation where savings go up materially in an environment where, if you look at penetration of pretty much any product in this country is very, very low.
Right.
So I think to that extent consumption will continue to grow quite strongly at the cost of savings, and therefore the question that Neelkanth made, ultimately we will have to find avenues of pools of money to be able to fund ourselves, because there's only so many pools that we have, which is household savings, government savings and corporate savings. I think corporates will continue to do well in an economy which is growing at, let us say, 6.5%. Government in general has been quite anemic as far as savings is concerned. I don't see that changing, and so therefore we will continue to see some semblance of pressure on the current account if consumption continues to grow at the cost of household savings. Maybe if Neelkanth.
So that has definitely been the case so far. But if I think about the next 3 to 5 years, or if you see not just savings but also the nature of savings. So we are now about two
like
generations.
SIPs as an example, right? Like that.
Yes.
Equity investments seems to have just kind of blossomed out of nowhere in the last 3 years.
There are lots of new asset classes coming up. So there are asset management companies that are floating, alternative credit funds, and then things, the venture capital funds. So the first round of venture capital that came into India was mostly global funds having an India allocation. What we are seeing in the last 2-3 years, even as the foreign funds have kind of pulled back because of problems elsewhere and in China and all of that, and of course excessive valuations and a down cycle. We are seeing a lot more of Indian VC funds starting to come up. So what happens after 2 generations away from agriculture is that the attraction of physical assets like land also starts to taper off. So 20 years back, if you had savings, your parents would tell you, buy some land somewhere because your great grandfather bought something and look, we are all better off for it. In the current generation, most people are going to be actually saving. So I think what Rajiv is saying is true for net savings. So when you look at savings, there is gross household savings and there's gross household borrowing. So I think both are starting to rise, which
right.
is that cold water, hot water. So gross savings will start to go up, and as the cost of funds and the ease with which you can lend improves, household borrowing will also start to go up. So it's the net saving which perhaps matters. But at an aggregate economic level, if say India services exports, and one of the things that I think has also happened is with this growing telecom connectivity, which we discussed earlier on the show, is that it is much easier now to participate in services value chains globally. So sitting in India, I know of fitness instructors who are giving yoga training to people in Canada and the US, but at a more systematic level, there are semiconductor fabs being run out of India. There are oil drilling companies the drilling data is being processed overnight and then sent back to the site. So there's a lot of services that can be provisioned from India as well. And as this number grows up, and it is growing remarkably fast, it can actually completely wipe out our current account deficit.
Samir, just one more point I wanted to make on household savings. Yes, household savings are going up, and I do agree that yes, there's a lot of money coming into equities, and I think SIPs have been a phenomenal success story over the last 10 years. But I think the composition is changing as well.
Right.
So equities, pension funds, and such like are growing at the cost of fixed deposits.
Right.
Right. I mean, you can clearly see that banks in general have deposit growth has been fairly lackluster because of the fact that household savings is seeing this change across moving away from the more traditional products to things like
mutual funds,
pension funds and such like.
And the other fascinating statistic there was that 55% of Indian household savings is in non-financial assets. And this is also declared, right? So the reality might be even starker.
Correct.
So it's in land and gold.
Gold.
And so if that changes, then this picture may change even more dramatically in terms of money coming to the.
But there's an interesting aspect to gold. I think one of the things that, just to go back to the point on gross versus net, the stock of gold is getting increasingly refined. Which is why you have so many gold loan companies. Banks are getting more and more into gold loans, etc. Once again, they are able to monetize their gold, may not necessarily sell it, but monetize through gold loans, which is once again good for banks, good for consumption, and so on and so forth.